We have the management of Mishra Dhatu Nigam, Sanjeev Singhal, the Director Finance, joining in. And congrats on your listing. However, the debut has been a bit tepid. The market for your products that you deal in has been, however, growing at a decent pace of almost 6% from 2011 to 2016. And while for the large part you've been able to outperform the industry, last year you grew at about 6%. So firstly, tell us what's aided your performance and also why there's been a glitch in FY17.
As far as FY17-18 is concerned, we had one of the major equipments, 1500 tons forge press, that was in a planned manner taken down for revamping. So that had impacted our production capacity. It was down for almost around 9 months. So this press is coming up in the first 10 days of April. So as far as 18-19 is concerned, we have full production capabilities. So the production growth should be there in line with what has been in the past. We have been growing at the around 10% per annum in terms of turnover as well as in terms of profit. So we expect that similar or a higher growth should be there.
Mr. Singhal, morning. Now your total revenues have grown at a CAGR of 9.2% from FY13 to 17. What kind of a revenue run rate will you be clocking in over the next few years?
The kind of money we have invested in the capital facilities and considering our order books and the defense and space requirements, we definitely expect to continue on the same trajectory. Their things may be better, not inferior to what it has been in the past.
There's been fluctuations in the prices and of course low availability of key raw materials like nickel and cobalt, which are some of the big risks to your business. How do you tackle these concerns, and do you have a direct pass-through system of the price fluctuations?
We don't perceive it as a major risk in the sense that my raw material consumption in terms of sales price is approximately 25%. And the orders which flow into us, they have sufficient lag time before the actual culmination into a order. So we are able to purchase the raw materials in advance. In addition, there are sufficient quantities of scrap, and when we are going to tap the commercial sector, we will be utilizing this scrap also for conversion. So raw material fluctuation should be protected.
Now, the performance in the first half of FY18 has been a bit subdued. That's largely on account of the shutdown of your plant for maintenance reasons. Can you give us updates on this plant and when can we see an improvement?
1500 tons forge press that was taken down during the year 17-18. It was a planned shutdown, and anytime in April this should be coming up. So for 18-19 we see the full facilities available for production.
And we've seen that defense is one of the biggest sources of revenues for you currently. Is there any margin and pricing differential there versus other businesses like space, aeronautical and nuclear?
No, the margins are similar. Of course, the customers are different, but we get similar margins on all our segments.
Finally, you have expansion plans lined up over the next 3 years. I understand there's a JV with NALCO. What is the total investment that you will be putting in for your expansion, and how will this help increase your overall production capacity?
JV with NALCO is with respect to the aluminium alloys at Nellore. That is still somewhat distant, will depend upon the MOU and ministry clearances, etc. And DPR is under preparation. So once the DPR is ready, then it will take around 36 months for implementation.
All right, Mr. Singhal, great chatting with you. Thanks a lot for giving us a perspective of what lies ahead for Mishra Dhatu Nigam, and all the very best for the stock as well going forward.